Hi there. This is the story of Fiserv, ticker symbol FI. Right now the market cap is about $46 billion and the price $60 per share. It has had a huge decline from $240 to $66. And most people think that Fiserv right now is undervalued. And now let's find the answer whether it's a great buy at the current level or not. So during this video, I'll open this box and you'll find my answer. Now, to understand this answer, you have to look at their business, what they do, why the stock price has declined so much, and what's next. Right? If you look at the revenue over the last 3 years, quite nice. A growth rate from 17 billion to 19 billion to 20 billion. And also their earnings have increased from 2.5 billion to 3 billion to 3.1 billion. And when you look at the earnings, compare them with their revenue, quite high margin. So this is a great company, Fiserv. Also the price to earnings is about 10. And if you look at the latest results, the last quarter or for the last 9 months, the revenue has increased just a little by 1%. Still, they were profitable, they reported a profit, but the growth rate has slowed down. And this is why the stock price has declined so much. They also lowered their guidance, growth rate from 10% to only about 3.5%, and also adjusted earnings per share from $10 to $8. And when the market saw that huge decline happened. Now, if they continue to grow only by 3% a year, then at the current level, Fiserv is fairly valued. At this price, you get a return about 10% around that level. Now, if the growth rate over the next 3 to 5 years goes back to 10%, from 3% goes higher, close to 10% or 8%, high digits, then you can easily have a rebound in the stock price, 2x also market cap, or even more than that. It all depends on their future growth rate. And then you have to ask yourself why their growth rate has slowed down. Because of lower demand, delayed in spending from the customers. We have high inflation, high rates, interest rates, and the demand got lower. Plus, besides this is the first risk. Besides this, there is also competition from the other players, Stripe, Adyen, PayPal, and other small players that want to take advantage of this huge market. And when you look at their profits, you understand why. When a company makes a lot of money in that industry, they attract more competitors. And you have to understand how they make money. They offer merchant solutions, which represents 45% of the revenue, and financial solutions, 55%. Short transaction fees and software subscription. And in this way, they make money. Now, you also have to check their balance sheet, because there is something that you have to be aware of. If you look at their cash, 1 billion, right? Not a big amount, it's what they need. But if you look at their debt, 30 billion. Is this bad? Well, it can be bad, especially if their debt keep going up a lot. If you look at the earnings, they make more than 3 billion, and the free cash flow can be higher than 4 billion. So they can pay this debt, let's say in 10 years or less than 10 years. It's still leveraged from my point of view. They have a lot of debt, they have to reduce it. But as long as they continue to grow by 3%, that won't be a problem. And if they rebound back to 10% growth rate, yes, they can get rid of that quite easily. They also done some acquisitions in the past. They're struggling to integrate that company into their operations. That's another problem you have to be aware of. And then you have to think, will this demand come back? This delayed spending, this spending will come back. For sure it will come. And there are high chances that you, from this level, have a double in the price and the market cap from this level. That may happen in the next 5 years or 5 to 10 years. There is a, let's say, medium to high probability that will happen. Now, for that, you also have to be aware of the risk from competition, especially Stripe and other players, ADN, PayPal, and others. Because when you have more players in an industry like this, payments, financial services, they'll compete with each other. Imagine you have 4 players, right? 4 players. Or maybe 8. What will they do to be more efficient? Well, they will lower their prices for transaction fees, for software subscription, right? And when they do that, also the revenue won't go that high, to slow down. So their earnings. And the more they compete, the more they lower the prices, the worse it will become for shareholders. Because at the end, their profits will get lower and lower. And you have to be aware of this trend. Because if this competition intensifies, you have more players, then for sure the growth rate will be slow in the future. And maybe you also see, you have the chance to see some declines, also in revenue and earnings. And if that happens, you no longer can have 2x on your investment. My prediction, tell you about financial services. In my view, financial services, transaction fees, this should be 0. Let me give you an example. Imagine that SMS, that service, direct messages from different operators. At the beginning, if you remember, they charge you some cents. If you remember, 10 cents, 20 cents, depending on your location, right? But nowadays, what do they charge? 0, nothing. Because they have more competition from social medias, messaging apps, and they no longer can charge a fee or commission. And this can happen also with those financial services. Now, here is the difference. Here, transaction fees, yes, they charge you a fee, but besides this, they also offer other services, those software services, subscription. When you purchase, you make an order, yes, they charge you a commission, but they also offer you those services, advanced features that help you, make your business more efficient. And that's why they will continue. Their fees won't go to 0, like in this case, SMS, but for sure, their rates, their fees will get lower over time. Just check their transaction fees over a longer period, over the last 10 years. And you'll see the trend. Not only for Fiserv, but also Stripe, PayPal, ADN, and other companies. And that's why you have to be very careful. Don't expect that the price will go back to $240. Saying thank you if you can have a double. Only if they come up with something new, to acquire other businesses, to expand into other areas, then yes, you may have more growth ahead. But from this perspective, you might have the chances for a double. And if competition intensifies, I don't think that will be bad in the next 5 years, so bad. But be aware of this competition. The revenue may be flat. over a longer period. I mean the growth rate to be around 3%, not more than this, not back to 10%. And if that happens, your investment from this level may have just a small increase. This is the risk I see. So to open the box and tell you whether this company is a great investment, I wouldn't say it's a great investment, just a good one. So the answer is yes for a good investment right now. Also, do your own research. Now, if you want better investment ideas than these companies, or you have the same thing, a decline in the stock price, but better advantages and long-term growth, simply go to my profile, press join, and choose Titan Investor. And there you will have access to my portfolio, where my annual performance over the last 4 years has been 30% a year. That's amazing. And on top of that, you also get access to an investing course, other in-depth analysis, so custom-made videos at your request, and bonus access to the previous levels, Spartan and Gladiator. So see you there. And that's it for this video.